Well, you're all bundled up, Sophia.
Oh man, the British weather. It ain't pleasant. It's
And
not
it's-
pleasant.
I know, especially this time of year, it's not.
Ugh.
yeah.
Okay, there's Diane.
Hi.
Hello.
Hi.
Hi, guys. Hi, Sophia.
Hello,
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 Diane.
everybody.
Hey, Richie. Hey, Dorsey. Andrea.
Okay, so it says 2 users are in the stream with audio only. Who is that?
You want me to take audio off? You did.
Oh,
There you
there
are.
we go.
There you go.
There she is, the pretty lady. Okay, man, a lot of shit is happening this month. Welcome back to the True Rock and Roll Podcast monthly P&L meeting for cryptocurrency.
Yes.
And man, there has been so much manipulation going on this month. So many things happening in the government. The Genius Act passed, yeah, whatever that means. Now the Clarity Act passed. I don't know if it gives us more clarity or more
No
possibility for
clarity and definitely
manipulation.
no geniuses.
What?
I said no clarity and definitely no geniuses.
That's right. Ah, Z is here. Okay.
It should be called the clown show.
Oh, absolutely.
Yes. The
Well,
circus.
don't,
No, the
don't,
circus. The clown
don't,
is in office.
Yeah.
no, man, don't make that mistake. They are being very, very purposeful about what they're doing. And there's a big deception going on that we really need to talk about because this could very well be the last shakeout. Okay.
Mm.
The last time they will be able to manipulate the market enough to be able to make people afraid and sell their Bitcoin. All right.
Mm-hmm.
Right.
If you got money in those ETFs, take your money out of that shit because
Mhm.
that's how they're manipulating the price of Bitcoin. They're actually stripping the volatility out. And without volatility, there's no possibility for you to have any gains. And then they keep it in their possession. You don't keep it in yours. But I got a couple of really good videos that explain why this is so important. And I'm going to start off with this short one by Andre Jix. He really has some good topics about, just generally crypto and economics as well, because it's really important that we understand economics when we're doing this.
Yeah.
So let me add this in really quickly and let him explain because he's really good at it.
Okay.
Screen.
So there's a company that most people have never heard of, and it might be one of the most powerful trading companies on the planet. It's called Jane Street.
The fact that they have become so large that even in a year that they have surpassed Bank of America and Citigroup at their trading desks in terms of revenue.
And to give you an idea of how big they are, Jane Street has made more money from trading last year than Goldman Sachs, more than Citigroup, and more than Bank of America. In fact, they're estimated to be behind more than 10% of every stock trade in the United States. And they are one of only 4 companies in the world that are authorized to create and redeem shares of the biggest Bitcoin ETF in the world. This one, BlackRock's Bitcoin IBIT ETF. Now, here's where things get really interesting because people have started noticing that there's this really weird price pattern in Bitcoin where Bitcoin would drop 2 to 3% at exactly 10 a.m. Eastern every single trading day for the past few months. And the theory says that this is because Jane Street is behind this manipulation. Because remember, this is also the same company that was banned from trading in India after regulators found them guilty of manipulating their stock market using a strategy that sounds almost identical to what they're now being accused of doing to Bitcoin.
Now, one of our top stories, the Indian market regulator SEBI has barred US trading firm Jane Street from trading in the country's derivatives market.
Now, on February 23rd, Jane Street was sued for allegedly using insider information to help trigger the collapse of a $40 billion crypto project called Terra, which also wiped out the savings of millions of people and set off a chain reaction that eventually took down FTX. And the moment that lawsuit became public, Bitcoin went up 10% in 48 hours, and that 10 a.m. drop stopped completely. That's not even the crazy part, though. The crazy part is that their co-founder wired $7 million, which was used to buy AK-47s, Stinger missiles, and grenades for a coup attempt in South Sudan. This is verified information, which could all totally be a coincidence, but that's what I want to help explain. This video is not just about Jane Street. This is a story about how the financial system controls the price of the one asset that was supposed to be outside of its control. So I want to show you who has the power to move this capital and how the ability to control the capital flow might also affect Bitcoin's price. So with that said, let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the market manipulation. So here's how all of this sort of fits into the financial industrial complex that was made popular by Simon Dixon. And before I show you what Jane Street allegedly did to Bitcoin, I want to explain who they are and what they do. Now, they were founded in 1999 and they're headquartered in Manhattan. They have about 3,000 employees, but the average employee makes about $1.4 million a year. Now, what makes them really interesting is that they don't really have a CEO. They're run by a management committee of about 30 to 40 people. Now, I'm assuming most people have never even heard of Jane Street. And that's because they have structured their company to be what's called a quantitative trading firm instead of a hedge fund. What does that mean? What that means is they don't have to tell the public what they do. Hold on, why? Well, it's because hedge funds have disclosure requirements. Banks have disclosure requirements. Jane Street does not, at least not in the same way. But what they do have is what people call control over the capital flow. Jane Street basically controls a lot of where money goes. And here's how. So when you buy Bitcoin through an ETF like this one here, IBIT, you're not actually buying Bitcoin. You are buying a share of a fund that holds the Bitcoin. Now, in order for that system to work, someone has to be there in the middle of it all to make sure that the price of the ETF stays close relative to the price of the actual spot Bitcoin. That's what people in the industry call an authorized participant, or an AP. Jane Street is one of only 4 APs for the biggest Bitcoin ETF in the world. Now, APs also get special privileges that no one else gets. For example, there's something called the rule of reg show, right, which is a rule for short selling stocks. For example, if you want to bet against a stock, meaning you want to profit when the price goes down, you would normally have to borrow the stock first. And that's just supposed to prevent people from selling the things they don't actually have. But authorized participants are exempt from parts of that rule. They're allowed to create and sell shares without the same restrictions. That's superpower number 1. Now, their second superpower is that when Jane Street reports holding hundreds of millions of dollars in IBIT, those filings only show the long positions, meaning the shares they own. What they don't show is whether those shares are hedged by things like short positions, options, or derivatives. So for example, we could be looking at a filing that says, hey, Jane Street now owns $800 million worth of Bitcoin ETFs. And we might think, that's amazing. How bullish, right? They're betting on Bitcoin going up. But in reality, their actual exposure could be 0. It could even be negative, meaning they could be profiting from Bitcoin going down, and we would never know. This is because the system does not require them to disclose their options, futures, or swaps positions, because they're an AP, an authorized participant. Now, if any of that was confusing, here's an easier way to think about this. Remember the Happy Birthday Pikachu card, right? Imagine the only way the public could invest in this was through a fund called the Pikachu ETF. The real card sits in a vault. There's only 4 companies in the world that are allowed to put new cards in and out of the vault and create or destroy the tickets that represent ownership of this card. Right? That's the AP. Now, those 4 companies could tell you they own a bunch of Pikachu tickets. That's public information. What they don't have to tell you is whether they also placed a huge bet that Pikachu's value is going to crash tomorrow. They could own the tickets and bet against them at the same time, and we would never see it. And if one of those 4 companies happened to be way bigger than the other 3, and if it could move the price of Pikachu by selling a huge amount of tickets at a very specific time of day that no one's paying attention to.
So I don't know if you've ever noticed when Donald Trump is doing his signing with his Sharpie, right? But the person who's always over his right shoulder is Howard Lutnick. Okay. So what he just talked about, which is betting that the price of Bitcoin will go down, is something that Howard Lutnick did last week. And we're going to talk more about him because this came up in the Epstein Files, which is the next video that we're going to watch. So we can sort of figure out how this happened. Okay. So let's go back to it real quick.
Well, that's basically what people are accusing Jane Street of doing to Bitcoin. And let me show you exactly how this works. Starting around November 2025, people started noticing something really weird about Bitcoin. Because every single trading day, Bitcoin would go down 2 to 3% right around 10 a.m. Eastern. Right? That's when the stock market opens, by the way. That drop would trigger what are called liquidations, which is a fancy word for when people are forced to sell their Bitcoin because they borrowed money to buy it. And when the price didn't work out in their favor, they were forced to sell. Now, once those liquidations start, it creates a negative feedback loop because the price goes down, more people get liquidated, which makes the price go down more, which forces more liquidations, right? You get the idea. And this was happening almost every single day. So people started noticing that this happened dozens of times in a row. There was a viral thread on Twitter about this, and it showed that the drops were happening at the same time in the same way during the lowest liquidity windows of the day. What does that mean? Low liquidity window means when a relatively small amount of selling can move the price of something by a lot. Now, if you're just a normal person watching all this, to us it just looks like, oh, well, I guess the market went down today. That kind of sucks, right? I guess we're in a bear market. But the theory is, if you're the one that's causing the drop and you've positioned yourself to profit from it ahead of time, this could definitely make you a lot of money. And here's how someone might be able to do this, allegedly. Step one, you buy spot Bitcoin, right? Let's say it's at $68,000. Okay, cool. Step two, on a separate exchange or through derivatives, you open huge short positions, meaning you'd bet on Bitcoin going down. Step three, you sell a huge amount of Bitcoin very fast right at 10 a.m. using algorithms during this low liquidity window, which triggers panic selling and liquidations. Step four, the price crashes to, let's say, $62,000. Now, you do lose money on the Bitcoin you sell, maybe 5%, but the profits on the short position is way bigger than that 5% loss. Step five, you close out the shorts for a huge profit. And for extra credit, step six, you buy spot Bitcoin again at $62,000, which is way cheaper than where you sold some of it. That buying pressure pushes the price back up, triggers a short squeeze, FOMO from other buyers and investors who think, hey, maybe Bitcoin's going to go up again and finally recover. And then you do it all over again, right? Huge shorts again at the new higher price, rinse and repeat. Right? That's how you get potentially months and months of sideways price movement where Bitcoin just kind of sits there and does nothing. Now, obviously, all of this sounds like a huge accusation, and it is, but here's what makes all of this kind of plausible. The moment that the lawsuit that was filed against Jane Street became public, this pattern stopped. Bitcoin went up 10%, $200 billion was added to the crypto market, short liquidations hit $213 million in 24 hours, and BlackRock's IBIT ETF saw a $250 million inflow in just one day, which may or may not have ended.
So does everybody understand what BlackRock's inflows are?
Yeah. Yeah.
It means they're buying. And they're buying from the people who have been scared out, right? So that negative feedback loop that he's talking about is actually how they manipulate the market, and they get the people who are scared out. And on top of that, they get to buy it cheaper than it actually is. Now, one thing people don't talk a lot about is how much Bitcoin is actually in circulation. And most of it's in circulation already. There'll only ever be 21 million, and something like 19.2 million coins are already in the system. So what does that mean? If they want to buy, they have to shake us out, turn us upside down, empty out our pockets. because there isn't enough there for them to mine. Does
Mhm.
everybody really understand
Yes.
that?
Yes.
So that's why this is the great shakedown, right?
Mm.
Let's finish listening to what he has to say because it's good.
5 weeks of outflows totaling billions and billions of dollars. That is all a huge, huge coincidence. Now, I do want to be fair because not everyone believes this theory. There is an analyst named Alex Kruger who looked at the data and said Bitcoin does dip around 10 a.m., but by 10:30 it's usually recovered. So it's not really a dump. It's more like a repricing that happens when the US market opens and new information enters the market, which makes perfect sense. There's another researcher though who's the head of research at CryptoQuant, and he says that what people are describing, buying spot Bitcoin and selling futures against it, is just what a delta neutral fund might do. What's a delta neutral fund? A delta neutral fund is a fund that does not necessarily care about the underlying investment, right? It's just a fund that's designed to make money regardless of whether the price goes up or down. So it's not manipulation. It's a trading strategy, and it's not even unique to Jane Street. And I also think that's a reasonable argument to consider. Now, if this was the only piece of evidence we had, I'd probably just leave it here and say, okay, maybe this is just how normal things work in the market. But this is not the only evidence. Because in July of 2025, India's securities regulator, it's called SEBI, S-E-B-I. It's basically India's version of the SEC. They investigated Jane Street and found them guilty of manipulating India's stock market. And the strategy they described was almost identical. They called it morning pump, afternoon dump. Jane Street would push prices up in the morning using one set of trades and then reverse those positions in the afternoon to profit from the drop. The regulator said it was a coordinated strategy that exploited predictable price movements that Jane Street itself was creating. Now, as a result of their findings, they froze $566 million of Jane Street's money, and they banned the company from trading in India. This was not a rumor, this is verified. And India was not even the only market. China has caught several Jane Street accounts of allegedly manipulating silver prices through their ETFs because Jane Street is a massive holder of silver ETFs. So I think we need to consider all of these options because they were literally caught manipulating the prices in almost the exact same way in other countries. And they haven't denied it. Now that brings us to the lawsuit. This is what sort of made everyone notice all of this. Because believe it or not, the lawsuit itself is not even about the Bitcoin dump at 10 a.m. The lawsuit is about something that happened 3 years ago over a $40 billion project, which you may or may not remember. So in 2022, there was a crypto project called Terra. Terra had two tokens, one that was called Luna and one that was called UST, which was a stablecoin, which remember is always supposed to be pegged to the dollar 1-to-1. Basically, the system would automatically create and destroy Luna tokens to keep UST pegged to $1. And as long as people believe in the system, then it works out. And at its peak, Terra's ecosystem was worth about $40 billion. Now, where it gets interesting is that according to the lawsuit, there was a former intern at Terraform Labs, the company behind Terra, who left and got hired by Jane Street. And while this person was at Terraform, they allegedly had access to confidential information about how Terra actually worked. And when they moved to Jane Street, they allegedly brought that information with them. The lawsuit says that this person was part of a private group chat where former Terraform insiders shared non-public information about the project. And Jane Street allegedly then used that information to build a trading strategy around Terra's collapse. Because on May 7th, 2022, somebody dumped $85 million worth of UST on a decentralized exchange called Curve. Curve uses something called liquidity pools, where UST was paired with other stablecoins. Now, when $85 million of UST got dumped into the pool all at the same time, it overwhelmed the system. Right? UST started losing its peg. It went from $1 to 99 cents to 98 to 95. And remember, the algorithm tries to fix this by creating more Luna tokens. But more Luna means Luna's price goes down, which makes them sell more UST, which creates more Luna, which crashes Luna more. It's more or less the same type of spiral that we talked about with the Bitcoin liquidation, except this one destroyed the whole Terra ecosystem in about 72 hours. Luna went from $80 to essentially zero. UST went from $1 to zero. 40 billion just lost, right? People lost their life savings, and according to the lawsuit, Jane Street knew this was going to happen because they had inside information from this former employee of the project, and they positioned themselves to profit from the collapse before it started. That's the lawsuit in a nutshell. Now, I want to be clear that Jane Street has not responded to these allegations yet, but that's what the lawsuit claims. But the reason that this is important to our Bitcoin story is that if these allegations are true, that means Jane Street has a pattern of doing this. Now, maybe India was a one-time thing, but they also have their fingerprints on China, on Terra, and now maybe on Bitcoin. And by the way, everything I've told you up to this point isn't even the craziest thing that's connected to Jane Street. One of the co-founders of the company, who's also named in this lawsuit, wired $7 million that was used to buy AK-47s, missiles, and grenades for a coup attempt in South Sudan. This was verified by the Department of Justice. Also, Sam Bankman-Fried from FTX. He worked at Jane Street before he started FTX. So did several of his future colleagues. Now, maybe all of this is just a coincidence, but the older I get, the less I'm starting to believe in those. Now, the real takeaway of this video for me is that this story is not really about Jane Street. Right? Jane Street might be doing everything they're accused of. Maybe they're not. The lawsuit's going to play out. The evidence will come out. What I think is the most interesting part is the system that makes all of this possible. Because Bitcoin was created to be outside of the financial system. That was the whole point. But the moment Bitcoin got securitized, when it got its ETF, it got its authorized participant. And the moment it got the authorized participant, it got a middleman with special privileges who could create and destroy shares, who might be able to hedge in ways that no one else can see, and who might be able to move the price during low liquidity windows. This is how the financial industrial complex system is designed. And I think the takeaway here is not, don't buy Bitcoin because someone manipulates the price. Bitcoin is one of the most important assets of my generation, and it'll always be under attack. The takeaway for me is that be careful of how you're buying Bitcoin. Because if you're buying Bitcoin through an ETF, that's fine, but you're trusting the system that Bitcoin was designed to replace. But if you're holding your own keys in your own wallet, none of this can affect you. The price might move, but no one can take your Bitcoin. No one can liquidate you. That's what not your keys, not your Bitcoin means. That's the whole point of self-custody.
So,
Wow.
this is really, really interesting because we've all noticed how the price kept dropping every morning, like right when the stock market opened up,
Yeah.
right when it opened.
Yes.
So, how do we deal with this? Well, like I said, we have to be part of a community. We have to self-custody. If we don't self-custody, they'll keep manipulating the market by doing exactly what he just explained, that negative feedback loop. And that's not what we want. We want to be able to custody for ourselves. That's the whole point. Why are we Bitcoiners? We're Bitcoiners because we don't trust the system, right? Now, the Epstein Files. So Bitcoin was mentioned definitely in the Epstein Files. And I actually found a really good video to talk about that because, you know, they've been focused so much on the salacious details of human trafficking that they really haven't focused on the potential financial crimes and manipulations that have been going on, especially with Bitcoin. So this guy really has, I've been listening to him for a long time. His name is James Corbett. He has a show called The Corbett Report, and he usually reports on geopolitics. But this time, he actually was reporting on how the Epstein Files illustrated the attempt to hijack Bitcoin. So let me, Vincent, you there?
Yes, I'm here.
Vince, I want you to do our disclaimer. What's our disclaimer? This is for information and educational purposes only.
I think Vince, you're muted, Vince. You're muted.
You're muted.
No,
This is not financial advice. This is for entertainment purposes only.
Only.
Entertainment and informational purpose only, okay?
Do your
But
own research.
exactly. Exactly. So anyway, this one is a little bit longer than the last one. But boy, the details are so important. It's definitely required listening. So I'm just going to get right into it because this is stuff we need to know so that we're not doing things out of fear. We're not fudding and we're not FOMOing back in. Because when we sell and trade our Bitcoin, this is why Dorcine and I stopped doing stop limits because of companies like Jane Street, right? If we had a stop limit order where we said if the price goes down 10%, liquidate me, we would have liquidated and then they would have got our stuff. And that's not what we want to do. So trading is not something that we're into because we are not algorithms and we're not professional traders, and they know how to do stuff like what Andre just talked about. So anyway, let's do the Epstein thing.
You're listening to the Corbett Report.
Welcome back, friends. Welcome back to the Corbett Report. It is February of 2026. And today I have a very important report for those who might be thinking that they are suspicious of all of the attention and coverage that the Epstein Files are gaining in the establishment media. If the establishment media is talking about it, it must be a psyop and distraction, right? Well, it might be a distraction of sorts. That is a distraction from some of the really scandalous, truly amazing information that we have uncovered in these Epstein files. And specifically, I'm not talking about the more prurient and more sensational headline-grabbing types of scandals. I'm talking about a scandal that you may not have heard about, but is probably one of the more important revelations from the Epstein files so far. It is contained in a very extensive, very well-documented article that is now up on brownstone.org. It is called The Hijacking of Bitcoin, and it is by today's guest, Aaron Day. So, Aaron, thank you very much for joining us today on the Corbett Report.
Thank you for having me on.
All right, let's get into this article, which starts by saying the original vision for Bitcoin was simple: peer-to-peer digital cash, free from banks and government. However, this article argues that this vision was deliberately hijacked, as Bitcoin is now pushed as digital gold, a scarce asset for Wall Street with slow and expensive transactions for everyday use. All right, well, Aaron, my audience may or may not be familiar with the ins and outs of the development of Bitcoin in the crypto space. So just to get everybody on board, perhaps we can start with just some basic information. You start by talking about the 2015 to 2017 block size fight. So can you tell us, what was the original Satoshi Nakamoto white paper vision for Bitcoin? What were the block size wars about? And how did that subvert that original vision?
Sure. Well, I'd like to start by taking a step back even before that, which is to go back to 2008 when we had the financial collapse, well, the global financial collapse, but certainly, a lot of it was centered in the United States. And, at this point in time, the banks were bailed out to the tune of billions of dollars. 10 million plus people lost their homes. And so there was actually a bit of unity coming out of the financial collapse and the bailout, where you had the Tea Party on the right and you had the Occupy Wall Street movement, which was manufactured, but nevertheless, you had the right and the left unified in their lack of support and lack of confidence in the traditional banking system for that at that moment in time. Bitcoin was essentially launched a year later, and the idea and the promise behind Bitcoin and what was written about in what's called the Bitcoin white paper was that, for the first time, we had this idea of having peer-to-peer digital cash. You had a cryptocurrency that could be used as an alternative to central banks, as an alternative to commercial banks. This was a form of money that was not created by these third parties that had a fixed supply, but it was intended to be used as an alternative currency. It was intended to be used as something that you would use to buy groceries or to buy coffee or to do day-to-day transactions. And it's a global currency, which is really important when you consider that 71% of the planet makes less than $10 per day. So the idea behind this is that you would now have a currency that you could use for day-to-day transactions that would have low transaction fees. And it's something anyone anywhere in the world could use for day-to-day purchases. So that was essentially the starting point. That was what the white paper was about. And that's how people were using Bitcoin in the early days. I was introduced to Bitcoin in 2012 by a guy named Roger Ver, who was speaking at a conference in my home state of New Hampshire called Liberty Forum. And he talked about what I just talked about, which is that, finally we had an opportunity to go around these central banks that, foment wars on both sides and so on and so forth. And that got me excited. And so I actually started using it myself in New Hampshire. In fact, at that point in time, 2012, 2013, there were numerous restaurants and stores in New Hampshire that were accepting Bitcoin as a payment method. And a lot of people don't understand this at all about the initial use of Bitcoin. Most people, because I've gone, my wife and I have been to 27 US states, 4 countries, talking about technocracy and central banks and what you can do as an alternative. In fact, you had me on the solutions report to talk about that a year or 2 ago at this point. And so we were using Bitcoin for that purpose. And by 2017, there were major retailers and organizations accepting Bitcoin directly. You had Overstock.com, where you can buy everything from furniture to a whole variety of different products. Microsoft accepted Bitcoin directly. Expedia accepted Bitcoin directly. You could actually book your travel and flights. There were Subway sandwich franchises that were taking Bitcoin. It was really hitting mainstream adoption. And then all of a sudden in 2017, Bitcoin went from being fast and inexpensive to use, in fact, cheaper than using the traditional financial system. If you're using a credit card, for instance, the credit card processor typically.
He's specifically talking about for merchants. So if you're a merchant and you want to take credit cards, then that's when they charge you those fees. So Bitcoin was actually a way to get away from that for merchants, which I think is really interesting, because now he's going to tell us what happened when they realized that people were actually using it for money.
It charges 29 cents per transaction plus 3.29% of the transaction. And at that point in time, Bitcoin was better, faster, cheaper money. But then all of a sudden, as the usage surged, by Q4 2017, you were seeing average transaction fees of $50. And it would take anywhere from 7 to 10 days to actually finalize a transaction. Well, obviously, no business can afford to pay $50 for transaction fees, and no one's going to be willing to wait 7 to 10 days. And so all of a sudden, people stopped using Bitcoin for day-to-day transactions, and which we'll get into, the narrative started to shift. People stopped talking about Bitcoin as peer-to-peer digital cash, and they started.
So do you guys see how they psyched us out? Because what they did was they realized people were using Bitcoin for actual money, right? And then all of a sudden they started calling it digital gold. And digital gold, well, gold actually is, let me let Vincent back in. He went out. So they went from they psyched us out.
Can you hear me now?
Yeah, I can hear you now.
You can't hear me?
I can. Anyway, they psyched us out by making us think that Bitcoin wasn't money, that it was like gold, which is a store of value. All right. Gold is someplace people put their money to make sure that they can hang on to the value of it and they won't lose their spending power, right? I'm saying this because this is really important to the way that we think about Bitcoin. So let's get back to it. But here's where the psych out began. We stopped using Bitcoin as money. And in many countries, people are still using Bitcoin as money. They're using it in El Salvador. They're using it in Africa. They're using it in South America, all over what they call the global South. People are still using Bitcoin as money and not a store of value. So this was a big deal. And it was basically a psych out.
And out of nowhere, people started talking about Bitcoin as being digital gold. They started talking about it as being a store of value, something that you don't spend, something that you just hold on to. And because there are only 21 million Bitcoin, allegedly, that will ever be created, it's even more scarce than gold. And, therefore, you should hold it and never spend it. And so this shift happened. And, the end point of the shift was 2017, but it turns out there was a process building up to that from, kind of 2015 to 2017. And we now know more specifically who the players were. And it does involve Jeffrey Epstein. It involves people from traditional finance that were involved in funding and not only the changes to the system itself, but were heavily involved in what I'll call the propaganda to change the public narrative from a digital currency to this store of value.
And for people who need more detail and information on that process of the hijacking of Bitcoin and what the block size fight was about, I would highly recommend that they read the book by Roger Ver with Steve Patterson, Hijacking Bitcoin, The Hidden History of BTC. It's at hijackingbitcoin.com. It goes through that history and talks about some of more of the detail of what you just mentioned there. But let's start bringing in the Epstein side of this. And in order to do that, I think we have to start at least setting the pieces on the table here. So perhaps we can start by talking about the early Bitcoin Foundation that was running in the early 2010s, that funded the core Bitcoin developers, how that collapsed and what came in to fill the vacuum of that collapse.
Yeah, and the way that I actually found out about all of this is I wrote a book a few years back called The Final Countdown, and my interest in this has been severalfold. One, as a user of Bitcoin who found Bitcoin to become unusable by 2017, I've been interested in studying the history of this, but I've also been studying central bank digital currencies. And so 3.5 years ago, I was studying what was going on, primarily because I was noticing that friends of mine that are at the intersection of crypto and liberty were being targeted by the federal government. And I looked into, well, why is this happening? Why specifically are people that are promoting Bitcoin and other cryptocurrencies as an alternative to central banks, why are these people being targeted by the federal government? And then I discovered that there's a global movement to roll out central bank digital currencies. And the central bank digital currency is a digital form of fiat that can be tracked, programmed, and censored by the government and other third parties. So this is if you're interested in freedom and privacy, the last thing you want to see is central bank digital currency rollouts. And so as I started researching this, I found that there are 134 countries around the world at various stages of developing and rolling out CBDCs. 11 countries have already rolled out CBDCs. And these countries represent 98% of global GDP. So, this is essentially everyone effectively is actively engaged in working on these CBDCs. Well, then, I started being based in the United States. I started looking at, well, what's going on in the United States? Where does the United States stand on this? And that's where I found, and most people still to this day don't know this, the Federal Reserve Bank has conducted 3 successful pilots of central bank digital currencies. There's a project called Project Hamilton, which is a project to replace essentially the dollar. It's a digital version of the dollar. And this project has been going on since, I want to say, 2018. They've developed a digital currency that can handle 1.7 million transactions per second, far more than the current capacity of the US financial system. This has actually been built. This has been tested. There's another called Project Cedar and a third called Regulated Liability Network. Well, when I was investigating these, what I found was all three of these CBDC pilots came out of MIT. So it was MIT working with either the Federal Reserve Bank of Boston with this Project Hamilton or working with the Federal Reserve Bank of New York with the other two. And at the time, I discovered that Jeffrey Epstein had funded this group out of MIT that was working on these CBDCs. So in my book and in subsequent articles, I made the point that, well, hey, it looks like Jeffrey Epstein is funding these CBDC pilots. What I also found is, to your point about the Bitcoin Foundation, so to take a step back, Bitcoin is an open source project. So it's open source code. Anybody can go online and go to the GitHub and you can actually download and review and audit the code. There's no central organization behind Bitcoin. So you have open source developers and people that contribute to the project, but there's no corporate entity funding it. Well, a lot of people might say, well, hey, this sounds great, but it turns out that open source developers don't develop code for free. There aren't also other white hat actors that are going out there auditing code for free. People work for compensation. This shouldn't be news to anyone. This shouldn't be a surprise. But if you have an open source project, then the project itself is subject to whoever's funding the developers, and the project could go in a direction you don't want it to go. So what happened is an organization was formed, a nonprofit called the Bitcoin Foundation, and it had 5 original people involved with funding it, Roger Ver and some of the earlier developers, and a lot of people contributed. And the idea was that this Bitcoin Foundation would preserve the integrity of the project and preserve the integrity of the white paper. There's a whole sordid history, which, by the way, should be written and researched on its own separately. I guarantee you there's a multi-part series on the internal dynamics of what happened with the Bitcoin Foundation. But before I get into kind of where the Bitcoin Foundation broke down and how this ties into Jeffrey Epstein, I want to talk about a character named Brock Pierce. Now, Brock Pierce is somebody that I've encountered. I encountered him first about 26, 27 years ago. And I didn't even know who he was at the time. I didn't even connect the dots until 2015. And without going into my own story and background, I'll give you the quick version of it. I started a technology company in 1995, and I was in the process of taking this company public. And we hired an investment bank, this firm called Lazard Frere, which is a really niche boutique investment bank out of New York City, but they usually only work on really high-end deals. And so it was a big deal that they were working on, our IPO as a kind of early technology company. But they had another company ahead of us that they were in the process of taking public called Digital Entertainment Network, DEN. And I encourage you to research on your own everything involved in this company. But the punchline is the company never went public and ended up filing for bankruptcy because all of the founders, including Brock Pierce, had to flee the United States because they were being charged with sex trafficking, or I don't know if it was sex trafficking, but there were underage boys and it was a whole big scandal. And so basically all of the founders left. Brock Pierce had previously been a child star. He was in the movie Mighty Ducks. And so he was actually brought in as a really young CEO to be the face of the project. And so I don't want to say anything defamatory about him, that he was necessarily leading the charge on, the other illegal activities. But the other 2 founders, I believe, were found guilty and were in hiding. Everybody went to Spain. Needless to say that their IPO didn't happen, and this actually impacted me directly because it actually shut the IPO window because the taint surrounding this project. And so I didn't know anything about it. I didn't pay attention. I couldn't have told you it was Brock Pierce then, but it resurfaced that then all of a sudden, this same guy, this same Brock Pierce, ended up becoming the chair of the Bitcoin Foundation. And I thought that was weird, just based on his background. I'm like, why is this guy the chair of the Bitcoin Foundation? But we later find in the Epstein Files that Brock Pierce went to Little St. James Island to an event hosted by Jeffrey Epstein in 2011. I believe it was called a Mindshift conference. A whole bunch of people from diverse technical areas were kind of sharing ideas and brainstorming and networking. And coming out of that 2011 event, essentially Brock Pierce began advising Jeffrey Epstein on all matters related to cryptocurrency. Now, I will tell you, no one knew this. I mean, I've been involved in crypto since 2010. I know people that have been involved in crypto since I was involved in 2012.
I think
know
we
people
talked
that have been
about
involved
this
since
before,
2010.
how they create these people, right, to be the heads of these organizations. So, you know, like Diane said, some of them are real idiots. I don't believe Elon Musk is the smartest man in the world. I believe he was one of these kind of people that was enabled by the financial structure and the military industrial complex to take a very high role in the financial and the IT growth system. Does that make sense?
Yeah, definitely. With Elon Musk, he's definitely part of a family that is connected to all kinds of stuff.
Right.
And
I
he's
still think he's
human agenda.
Dolly the sheep.
Yeah.
I just can't. I just have this feeling he's a human Dolly the sheep. You know.
Oh, that's definitely questionable.
Remember Dolly the sheep? Sheep was the first. So they claim cloned animal.
That's right.
No one knew that Jeffrey Epstein had any involvement at all. Even the article that I wrote suggesting that he was involved in CBDCs, I only found one article where Jeffrey Epstein was ever interviewed talking about Bitcoin, and it was in a publication called NexaWeb from 2017. So the only article we ever have from Jeffrey Epstein is in 2017, where he discusses the fact that he believes that Bitcoin is not a currency. The peer-to-peer digital cash is outlined in the white paper by Satoshi Nakamoto, but rather he thinks it's a store of value. And I thought it was very bizarre. Like, why is the only article this guy ever has on this topic him talking about this narrative shift? It didn't make any sense to me, but you know, I suggested in an article that, hey, maybe he was involved in not only funding MIT and these CBDCs, but then this other part where the Bitcoin Foundation, as I mentioned, is this nonprofit that's funding these developers, where Brock Pierce is the chair. In 2015, that organization implodes. They have a whole series of internal issues, financial issues. Some of the people on the board had issues with the government involving cryptocurrency exchanges and money laundering and so on and so forth. And so it just so happens, as Bitcoin is making this shift from digital cash to digital gold, the funding of the developers went from the Bitcoin Foundation, headed by Brock Pierce, to MIT. MIT started to take over the funding of these developers. And I suggested that Epstein might be involved. And we now know from the Epstein files that not only was he involved, but in an email from Joy Ito, who is the head of MIT, to Jeffrey Epstein, email exchange, Epstein's money was explicitly earmarked to fund these developers. And they even name the developers. There's Gavin Andreessen, there's Vladimir Vonderland or something like that, and a guy by the name of Corey Fields. So it's now we know that it's there in writing that Epstein was funding this, while the Bitcoin Foundation, which imploded, was run by Brock Pierce, who was Jeffrey Epstein's advisor on crypto since 2011. So this gets more intertwined than I could have ever imagined. And you know, as we'll continue to discuss, it even gets worse from there.
It does. And you've already painted quite an incredible picture there. And for people who need to see the evidence, obviously, Brock, my video editor, will be showing this on the screen, the specific email exchanges that you're talking about. But of course, they're all contained in this voluminous article that we're discussing here. So we've set the table, and now we have a sense of some of the players that are on this table. How do things develop from the point that we have MIT starting to literally fund the core developers of Bitcoin? How does the change take place, and what other organizations and people are involved in it?
Well, there's another step that actually happened before MIT took over the funding of the developers, and this involves the company Blockstream that you'd mentioned. And Roger Vere's book and Steve Patterson's book, Hijacking Bitcoin, goes into this in some detail, but I do want to explain a little bit about what Blockstream is and how all this fits in. So Blockstream is a company that was started by a few early Bitcoin core developers. And the basic idea behind Blockstream is this. What they did was, and we haven't really talked about the block size, but the original idea behind Bitcoin was for it to be peer-to-peer digital cash. And Satoshi Nakamoto discussed in these online discussion forums the idea that from the very beginning of Bitcoin, it was intended to compete with Visa and MasterCard. Satoshi talked about the idea that Bitcoin should, in the fairly early days, be able to handle 25,000 transactions per second, and that it should be able to get even faster over time as computers get faster, as bandwidth increases, so on and so forth. He was looking at Metcalfe's law and some of these other things that apply to technology, which is that, this still holds to this day. Technology tends to get cheaper and faster. And so he was saying, well, hey, 25,000 transactions per second now, but this thing should scale to do millions of transactions per second. And so the way Bitcoin works is you have what are called miners, but I'll try to simplify how this works. You have computers all around the world that are trying to solve very complex math problems that are very expensive in terms of computational power to solve these math problems. And the computer that solves the math problem first gets to add the transactions from in this 10-minute interval. So there every 10 minutes, a new math puzzle is solved and new transactions are added to the blockchain. So it's an immutable ledger, and every 10 minutes, there are new blocks of transactions being added to the blockchain. And the way that it was structured was, at the very beginning, every 10 minutes, if you solved this math problem, you would get initially 50 Bitcoin for solving the math puzzle, plus whatever transaction fees happen to occur in that block of transactions. And then every 4 years, this reward that started out as 50 halves. So after 4 years, the miners would receive 25 Bitcoin for each block that was solved. And then 4 years after that, 12 and a half, et cetera. And you keep on doing this halving until at some point at the end, 21 million Bitcoin have been created, and that was the fixed cap. Well, why was this structure put in place? The structure was put in place as an incentive early on. While there weren't a lot of transactions and transaction fees, it was an incentive for miners to secure the network and to have a lot of different computers competing to solve these math problems so that you didn't have the concentration of the network in the hands of a small group of people. This was the economic system of Bitcoin. And so there was the original design had no limit to the size of the blocks. So in other words, the original idea was, well, yeah, we should be able to process 25,000 transactions per second. These blocks were expected to become large, and the miners were expected to be computers that were in big data centers. This was, again, Satoshi talked about this at length. But early on, as they were testing the network, as you're testing these kinds of systems and you're trying to work out the kinks, they put in a 1 megabyte limit just for testing purposes. Well, that 1 megabyte limit, you can only put about the equivalent of 7 transactions per second worth of data into a block. So this was initially done as a test. And then this is why we discuss in the hijacking part of this, a whole bunch of people then decided, well, we're going to make that 1 megabyte cap permanent. And they put a whole bunch of argumentation around it. The network needs to be decentralized, so on and so forth. And so we're going to throttle Bitcoin so that it can only do 7 transactions per second, but we're going to build what are called second layer solutions on top of Bitcoin to be able to handle more transactions and to make it, actual peer-to-peer digital cash. And so this company Blockstream was formed to be a second layer solution, a for-profit company that would benefit and in fact would only be viable if Bitcoin was throttled at 7 transactions per second. So does this make sense so far? Hopefully I know a lot of
It makes sense to me, but I've been following this for a long time. For people who need more information on this, of course, they can see the Hijacking Bitcoin article and the Hijacking Bitcoin book that we talked about before. But yes, long story short, there are people who want to keep the blocks small, and those are the people working for companies like Blockstream that, oh, by the way, happen to have ties to Epstein. So let's get into that.
So there's that. So there's the company Blockstream that personally benefits from the blocks being small. And Blockstream as a corporation, and we knew this from Hijacking Bitcoin and from publicly available information, had, let's just say, the kind of investors that the point of Bitcoin was to actually get rid of these kinds of companies in traditional finance. One of the big investors was a guy named DeCastries, who was the CEO of AXA, a big European company. He also happened to be the chair of the Bilderberg Group. So you had all of these companies investing in Blockstream that were part of traditional finance, the thing that Bitcoin was there to disintermediate.
Really important. That's why we all need to be running nodes and, some little kind of mining machine, because like he said, we don't want the network or miners to be concentrated into a small group of people.
To get out of financial transactions. Well, what we found in these Epstein files is that Epstein actually invested in Blockstream before the collapse of the Bitcoin Foundation and before he funded the developers who cemented the changes that Blockstream benefited from. This was absolutely bombshell information for everyone. No one knew this. This was not something that was widely known at all. And in fact, the CEO of Blockstream from the emails apparently visited Epstein's island, as did others involved with Blockstream, and nobody had any idea that this was going on. So in other words, to simplify this, Epstein invests in Blockstream, a company that benefits from Bitcoin being throttled. And then 7 or 8 months later, fortuitously, the company that had been funding the Bitcoin core developers, which was chaired by Epstein's advisor, Brock Pierce, collapses. And then he ends up funding the MIT developers that cement the 7 transactions per second and 1 megabyte block size. Just absolutely fascinating information. But it gets even more bizarre as we go through this. Because remember, my first foray into this was, hey, it looks like, why is Epstein funding these CBDC pilots? So there are a lot of people claiming that these second layer solutions for Bitcoin would enable it to be peer-to-peer digital cash, as opposed to just, following the original design. But what you find is, if you're going to now change the narrative for Bitcoin, and you're going to call it digital gold, and you're going to call it a store of value. Well, in order to be a store of value, it needs to either maintain its price or go up in price. Otherwise, people will not view it as a store of value. Well, we're going to go back now to the same guy, Brock Pierce. Brock Pierce was a co-founder of a company called Tether, which you may have heard of, which is a very popular company even today and a very large company now. Tether is a stable coin. A stable coin is a digital token that essentially represents fiat, where one token, one USDT token equals $1. And in theory, how this is supposed to work is, in order for this token, this Tether, to maintain its peg, there need to be assets backing it that are equal to or greater than $1 worth of value. Well, it turns out that during this time period, in 2017, when the narrative shift happens, a University of Texas study found that over 50% of the price appreciation from Bitcoin in 2017 was due to Tether being printed and used to buy Bitcoin. But it was separately found from two different actions, one from the CFTC and one from the state of New York, that Tether was in fact not fully backed. And that the CFTC found, I believe, that there were really only 27 cents worth of assets backing $1 worth of Tether. In other words, they were printing Tether out of thin air and claiming it was backed by fiat, which is also money that's printed out of thin air, but it wasn't. And then they were using that to pump the price of Bitcoin, which is what created the whole store of value narrative to begin with. So in other words, what I'm suggesting is the whole idea that Bitcoin is a good store of value is a fabrication based on this fake Tether printing that, Brock Pierce was the co-founder of that company, while also the guy responsible for handing over the development of the funding of the development of Bitcoin and hobbling it to MIT through Jeffrey Epstein. So it's just remarkable how all of these pieces are fitting together.
More and more remarkable because it isn't just Brock Pierce connection. There's other connections to this stablecoin space that present themselves in the Epstein Files. Like, who's been in the news recently for his Epstein connections? Oh, Howard Lutnick, who denied having extensive Epstein ties. Turns out he does have some Epstein ties. Let's talk about Howard Lutnick.
Yeah, Howard Lutnick is a very fascinating character in all of this. And I've actually been writing about Lutnick for a while. And this story is also, to me, when I look at this is a level of corruption that's far beyond, say, for instance, Nancy Pelosi engaging in insider trading. Howard Lutnick is, and where people may have just become familiar with Howard Lutnick is, he had to testify recently on his relationship with Jeffrey Epstein. Howard Lutnick is Jeffrey Epstein's next door neighbor in New York. And it turns out it looks like he might have purchased his house from a trust created by Epstein, which is bizarre in and of itself. And I'm not going to, the fact that, Epstein and Lutnick have, 9 and 11 are the addresses on the street that they shared together in New York City. That, I'm not going to go, I don't know anything about where to draw conclusions with that. But when Lutnick was testifying for his position as U.S. Commerce Secretary, he claimed that, he'd only met Epstein once in 2006 in New York and was absolutely disgusted by him and had nothing to do with him. This was what he was saying as he was going through his confirmation process. And we now know from the Epstein Files that that's not exactly true. We know that, in fact, Epstein donated, I think it was $50,000 to a fundraiser in Lutnick's name. Lutnick visited Epstein's island with his family. They were business partners together. So Lutnick completely lied about his relationship. And then even when he was grilled on it, he's like, well, the extent of my relationship is whatever it is that's in these documents. We already know that he lied before, and so I'm sure there's even more to it than that. But I had separately written, before even knowing the Epstein connection, about Lutnick's involvement with Tether. Now, this is a fascinating story. I mean, I've been around politics for a long time, and no one heard about Howard Lutnick. Howard Lutnick was not a major player in Republican politics. In fact, he was a major fundraiser for Hillary Clinton in 2016. So this is not a guy that is known for his role.
So does everybody understand what they're saying about stable coins?
Yeah, sort of.
The whole idea of stable coins is that they're supposed to be a 100% store and not usury, which is the fractional banking system that we have right now. When in fact, Tether is part of that fractional banking system that we have right now. So they're only required to have 25% of the value of $1 on hand. Does everybody understand? What
Are
that
you just Andre, are you just talking about Tether or are you talking about stable coin in general?
Tether is a stable coin.
Right. Tether is a stable coin, but what he said that stable coins all represent fiat, all of them.
Yes, that's right.
So they're backed
That's
by the
absolutely right. They may not be conducting their business in the same way as Tether, but
right.
he's right. They're all based on fiat money. So Tether
Okay.
is kind of like a double Ponzi. All right.
Yes, it is.
Yeah. So it's like it's built on top
Yep.
of the fiat system, which is just printing money. It's
Right.
monopoly money, and then they're adding another layer onto it. And I thought it was really interesting what he said about the Bitcoin layer, right? Adding another layer to speed up transactions. When originally, according to the original white paper and the original design of Bitcoin, it should be able to handle. I thought this was fascinating.
It is. It's
The
it's
fact
like
that
a web. It's like a web that's
exactly, it's like a
it's
web of
yeah,
connectivity. Now
right.
he's going to get into some of the people who are in the White House at the moment. So let's let him finish. Let's hear this.
In Republican politics. So I'm going to walk through the timeline here. So before the election, a few years before the election, Howard Lutnick, his firm, Cantor Fitzgerald, invested $600 million in Tether. They were the largest at that point ever outside investor in Tether. And part of the terms of this agreement were that in exchange for this investment, Cantor Fitzgerald would essentially get the exclusive contract to manage all of the United States treasuries backing Tether. Now, I know this gets a little bit complicated, but I want to walk back a few steps. So remember, I told you that Tether was found to not have reserves. Now, there was no requirement that Tether be backed by US treasuries. There's no regulation prior to this Genius Act, which I'm sure we'll get into. There was no requirement that you had to back your stablecoin by US treasuries. You could, for instance, back it by gold, silver, Bitcoin, other cryptocurrencies, whatever, just so long as you had adequate backing, there was no rule or regulation. So Lutnick gets involved to manage treasuries. Now, did Tether even have treasuries? I want to point out at this point, which by the way, to this day is still true, Tether has never passed an audit. They have never successfully passed an audit, and they've actually gotten to the point now where they can't even get an audit firm to work with them. So, these big audit firms that work with publicly traded companies all of the time apparently don't want to work with this, company that has now a multi-$100 billion market cap. That's kind of a red flag in and of itself. So Lutnick makes this investment with the contingency that he gets to manage these treasuries. Then all of a sudden he gets involved in Republican politics. Now remember, he's a big fundraiser for Hillary Clinton in 2016. He goes from that to being the chair of Donald Trump's transition team. This is a massive position. The head of the transition team is responsible for vetting all of the cabinet. So is involved directly in recruiting and vetting every person at the level of the cabinet. So how you go from not being in the Republican Party politics and supporting Hillary Clinton to that role is something that needs to be investigated, because that's very, very bizarre. But what's worse than that is originally Lutnick was trying to engineer and put himself up for Treasury Secretary. He was actually trying to position himself. There was a big kind of debate about this. And we now end up with this guy, Scott Bessent, who is an advisor to George Soros, which is a whole other separate bizarre situation. He ended up.
So that just goes to show you that there is no left and right in this country. It's only up and down.
Well, think about this. Lutnick just cut a deal with his company to manage the treasuries for Tether, and then he wanted to become the Treasury Secretary. I think that was real estate. All of it is going to be tokenized. Larry Fink has talked about this. At BlackRock, he said that everything is going to be tokenized. This bill is working its way. It's already passed the House, and it's going through various iterations, but this is how we end up owning nothing. And not to go into too many details about this, but if you've ever talked about the Great Taking, there's a whole bunch of the legal framework shifts that have happened in the United States since 1994 that essentially make it so that the next time there's a financial collapse, you might think if your broker goes out of business that, well, hey, those are my investments. I'll just point those over to a new broker. Well, it turns out in all 50 states, they've changed the laws so that, in fact, your economic interest in these investments will go first to the creditors of your broker, which namely will be the 4 largest banks in the US. Once you create digital tokens that represent these contracts, then when there's a financial collapse, they're going to be able to basically shift everybody's assets with a click of a button. So I wanted to mention that because it's relevant and it's active right now. And Howard Lutnick's firm is positioned to be a major beneficiary in this as well. So you asked what we can do. We have to absolutely make it public and accessible for everyone to understand how not only corrupt this is, but this tokenization through these 2 bills is accelerating technocracy. I've been saying that this last election that we had was technocracy with resistance versus technocracy without resistance, and technocracy without resistance won. We got backdoor CBDCs. We have in the United States Real ID, which is a digital ID. We have Palantir connected into federal government databases. We have AI surveillance. Technocracy has flourished. I mean, this isn't like a 2030 thing. This is a 2027 thing. So I wanted to mention that. But I don't really believe there are a lot of political solutions for this, which is why what I've been advocating for as a real solution is to exit these systems. Stop using fiat currency. Do not use government regulated stablecoins. Get out of centralized tokenization. Start using privacy coins. Start using gold. Start using silver. Exit the healthcare system in the United States, which, my wife and I have launched it's a free service. We don't make any money off of it. It's a global medical tourism marketplace. But, every minute in the US, somebody files for bankruptcy due to medical bills in the US. 75% of those have insurance. The system is a complete scam. Exit that, cancel your insurance, form a trust, and then investigate using medical tourism where you can actually save up to 80% and get better healthcare outcomes. The real solution to this is for us to take our lives back, to take back our free will, and to build parallel systems. At this point, this is the way, and we can do it, but we really don't have a lot of time. And I have been, for the 3.5 years, I've been saying, this is it. Technocracy is it. Digital currencies, this is the platform. But it's even happening faster than I could have ever imagined. And it is more corrupt and incestuous than I could have ever imagined. And now for the first time, because of these Epstein files, we can actually follow the money and start tracking what's going on.
All right, an incredible amount of information. I'm very much looking forward to that 12,000 word deep dive and hopefully more information yet to come. But for the meantime, we will direct people to brownstone.org for this article that we're talking about today. It's called The Hijacking of Bitcoin. Everything that we have talked about today will be in the show notes for today's episode at corbettreport.com/Epstein Bitcoin. For all of the notes and all of the links to everything that we're talking about. I think we're going to leave it there for today. Aaron Day, thank you very much for this deep dive and for bringing it to our attention.
Thank you for having me.
It's a lot to digest, right?
It's a lot, but it rings.
What's really interesting is that he's wearing an orange shirt, right?
Mm-hmm.
He did not anywhere say, give up your Bitcoin. What he did say was invest in other assets like silver and gold and try as best we can to escape the system. So,
yes.
For me, the first story helps to gain a lot of understanding about what's happening right now. Jane Street is definitely manipulating the marketplace to help to keep the price of Bitcoin low. And while they're doing that, the inflows are incredible into these ETFs. So they're buying it as people get scared and run away. They're buying it all up. and they're going to keep that for themselves. And I honestly believe that when this is all over, the only people that are going to be free are the people who have invested in Bitcoin, gold, and silver. All right.
Yes. Yeah, that's for
That's
sure.
it. I
But
honestly believe that.
yeah, I like the ending of his analysis, sort of, that, to be honest, everything has been hijacked. One of the big things that has been hijacked is our health. And there are certain things that sort of need to become right first before we can
Right.
even take note of this, because they've hijacked everything. But in order to have
Right.
sovereignty,
Even the NHS, the system that we
oh,
all envied, and
totally,
has been
totally,
hijacked and
because
privatized.
this hijacking is just a typical example of the hijack of everything that has gone on in the world. The hijack of our health, the hijack of our schooling system. This is the same playbook over and over again. It's basically funding two sides of the narrative, keeping everybody confused. And you can see that they're trying to hijack Bitcoin, as you know, obviously they're trying to change the white paper, and not have the original sort of
They are
print.
definitely trying to do that, change the original intention. But
Yes,
again, like
exactly.
I said, that's a psych out, right? It all
Yes,
depends on how we feel, how we think about Bitcoin. Are we just going to hold it and never use it? What he's
exactly.
saying is that that is not what it was intended to do.
Intended for is intended
Right.
for
This
peer to peer.
idea has been supplanted in our minds through the media,
Yeah,
right?
yeah.
Calling it digital gold. It's not money anymore. It's
No.
something that you should hang on to, right?
Yeah,
And
yeah.
I believe that only about 1% of the global population is going to be able to own Bitcoin. And anybody who doesn't have it is going to be under total surveillance. There's no way out, right? So when this is all over, I can see the very rich people having Bitcoin and everybody else not.
Yeah, yeah. Well,
So,
well, again, it's what's meant for us is the
yeah,
CBDCs, the
right.
digital
And
currency.
that's why, especially in the UK, God, they're so draconian about
Yeah,
taxing you and you not using and you not trading. I
yeah,
set up a Coinbase account for a friend of mine when I was in the UK. And I
yeah.
mean, I couldn't count the number of times they kept giving me warnings. You could lose all your
All
money.
your
Are you
money.
sure you
Yes,
want to
has
do
to go
this?
through.
I would say, yes, I'm sure. Are you sure you want to do this
Yeah, that's
again?
right. That's
Because you
right.
can
That's
lose
true.
all your money. And I wasn't trying to take any out. I was trying to put some in to
Ian,
somebody's
you
account,
can't make it
right?
up.
Can't make it
Well,
up.
we know that the UK is the head of the snake.
Exactly.
The UK is
And
the head of the snake.
Richie liked that one.
What's that?
Uh, the thing we have to really remember is we got to get our stuff off the exchanges.
Yes.
Okay. You have got to put your stuff into a cold wallet and take custody, not your keys, not your
Not your
Bitcoin.
crypto.
Because you can see how everybody is involved in the great reset, right? And the great Ponzi.
Hmm.
We have to think of this the same way that things were at the beginning of the 20th century, when we had all the robber barons who took over the railroads and the
Right.
banks and everything else that we use today, right?
Same
This is
playbook.
this is the age of technocracy. So instead of it being an industrial age, now we're in the technocracy
Technocracy.
age.
Yeah.
Right. Right.
Plutocracy.
Exactly.
It's all of the elites. They're
Yeah.
all connected. They're all literally on the whole, bandwagon of having, transhuman agenda and
Right.
control. And
And
this is
control.
and
Right.
control,
Control. I mean, because what good is the money if you can't control us, right?
right?
The other thing I thought which was really interesting that he talked about was how Jane Street invested in the war in South Sudan. Now
Hmm.
there's some really nefarious connections between Israel and the UAE funding that insurgency group called the RSF in South Sudan. So they are actually contributing to that gigantic genocide where they have killed so many people, you can see the blood from space.
Unbelievable.
So all wars are bankers' wars.
All wars are bankers' wars.
Everybody, let's work real hard on running notes. If you got money invested in an ETF, take it out and buy the underlying asset. And don't give them the opportunity to continue this Ponzi scheme on us ad nauseum, because that's exactly what they will do.